So the other day I was talking to my friend about wealth taxes. I forget how this topic came up, but I didn't actually understand that when people were talking about wealth taxes, they were actually talking about like taxing the net worth of an individual, like taxing like if you take their assets and their liabilities and you see that's an aggregate positive, then you tax a percentage of that. And I was like, wait, that that sounds like that doesn't sound like an idea that makes any sense to me. And my initial intuition was something like, if that money's not being like used for anything, as in like, it's just sitting either in a bank account or it is sitting as in like you're holding the stock share or whatever that may be. It's like, why should that be taxed? That didn't make sense to me. The example I give is like, if I have like a 0% savings account and I just put like $2,000 in there and it doesn't accrue any interest, and I already paid the tax on the income for that year, for on the income of the 2,000 for that year, then I shouldn't be taxed more for that. Why would I get taxed more? Why should I get taxed for hoarding my stuff? And this intuition wasn't exactly correct because that's not effectively what's happening when you like own a stock or that sort of asset, because it does grow and fluctuate in value a bunch, unlike something in a savings account. But yeah, that was my initial intuition for like, wait, the wealth tax seems like a stupid idea, because I thought that when people were talking about taxing the rich, that they were just talking about like effective tax rate, where it's like, okay, if a rich person has an effective tax rate that's like in the single digit percentage, yet if you look at our highest tax bracket in America is like 37% once you make is it 600,000, 500,000? It's something like that. Let's see. U.S. income tax. Income tax brackets. I think it's like 500K is where it starts to be relevant. 37% when you make 578K. Yeah. So I thought it was something like that, where it's like, oh, how do we make them have the effective tax rate that they would have if they made their money as income, rather that, because that's the reason why super rich people don't pay a lot of tax, because they're not paying it as income. And then they have a bunch of schemes where it's like, oh, I get tax deductions from my philanthropic work or some other thing, to where they can make it so that their aggregate liability is higher than the asset. So yeah, you have stuff like that. And then the thing about it was the whole like loan regime, where it's like you take a collateralized loan on your assets, and then you only have to pay the interest because it's not a taxable event, the loan itself. I'm pretty sure it's something like that. So I was like, get around those loopholes so then you can tax the rich more based on like how they actually use their money, not tax their like net worth. That seemed odd to me. Then I learned how like the wealth tax actually works, which is, yeah, the taxing the net worth. We'll talk about like intuition again real quick, which was that we were talking a little bit more about this, and I was thinking about what was odd about that methodology in general, which was that I was like, okay, so your income tax is done over the course of a year. So it's like, okay, you made this much money in this year, so we're going to tax you this percent based on whichever scale of the bracket you're on. So yeah, we do that. And that calculation is relatively simple to do, because you can see on the payroll and all that stuff what your W-2 is, and then you find out how much money you made. So that's relatively simple to do. Whereas the if you're taxing net worth, that's not like done within a year capacity. Your net worth is changing every day. So it's like, okay, do you just take like a random snapshot at a certain date that's like, okay, at this date you had this much money, or this much in net worth, so pay 2% on that. And I'm like, wait, that seems ridiculous, because your net worth could literally just change the next day, and it could be lower, it could be higher, it could be, so that seems absurd. And then once you tax that, it's like, okay, you don't have that money on hand to use. So you have to like sell your assets in order to get that money in some way, or have the cash to do your taxes. And then once you sell your assets, depending on how much stuff you're selling, you might affect the value of the asset that you're selling. And then there are some assets that the valuation is only determined by the fact that there is some third party person valuating it at a certain price. So it's like if you have shares in the private company, it's not necessarily the case that you can sell that asset at the price that they evaluated the company at the time, because the sale is very different than when you're doing like public stock trade. So yeah, it got very confused very quickly, and I was like, oh, this is why wealth taxes are stupid. So yeah, first of all, I didn't even know what people meant by wealth tax. I thought they meant the sensible thing, which is like, oh, there's a bunch of tax loopholes that allow billionaires to have, or super high net worth individuals or business owners, let's say, to be able to have an effective tax rate that's way lower than what they would pay if it were all income. That was like the main thing that I thought everyone was talking about when they're like, oh, tax the rich. But they were actually saying, no, tax their net worth. And I was like, wait, that's a terrible idea. That's stupid. So yeah, I thought about that finally. Thought about that issue because, there's so many things that, again, sound good on paper, but then when you actually think about the logistics of it, you're like, that's not economically sound. Not to mention that even if they did a wealth tax sort of thing, and they, assuming you could get all that assets and the revenue associated with the wealth tax at 100%, which it wouldn't be 100%, then you only make like, I think we said they made $40 billion, which was like a little over like 10% of our discretionary revenue, or a little under 10% of the US revenue. And I was like, that's, in the grand scheme of things, that's not that much money. That doesn't even fund our social security. Our social security was like, not social security, I think it's social security and Medicare, like all the social services was like 2.2 billion or something like that. Or 2.2 trillion, I mean. So it's like, you're not going to fund more programs by taxing the rich. So at the end of the day, it ends up still being a budgetary problem of like, use the money better. Use the money that you already have better. So yeah, I was like, okay. Or tax everyone more, which is what Europe does. So it's like, I don't know. Anyway, that's my opinion on wealth taxes. I think they're stupid, that it just doesn't make sense to tax wealth because of the way that wealth works. I read this article by Noah Smith on this idea, and when I read through it, I was like, oh, okay, my intuition was kind of sort of correct on how taxing wealth is an absurd proposition, because wealth is kind of like an illusion, because that money doesn't actually exist until someone actually buys the stock. And then while they're buying the stock, it can change the value of the underlying asset, and then yeah, things can get crazy depending on how much of the stock you're selling. For most individuals, it's not a big deal, but for these hyper wealthy individuals, it probably matters how much stock they have in certain companies and being forced to sell it. So yeah, that's not ideal. And then we can talk about them like doing tax avoidance schemes, and then you don't get that money anyway. So yeah, there's a bunch of things where I'm like, okay, that's not ideal way to tax higher earning individuals. Anyway, if you liked this rant, if you want to get mad at me for not wanting to tax the rich, apparently, but I didn't say I didn't want to tax the rich. I said that wealth taxes in particular are a stupid way to do that. So like if you like, dislike if you dislike, leave a comment letting me know why you like or dislike, and I will see you all next time. Bye-bye.